Good morning. It's the 12th of January. We're Signal Centre Talking Bull. I'm Joe, joined by Steve. How you doing, Steve?
Good, thanks. We're back on TradingView live streaming, thankfully.
Yes, bit of a disaster yesterday. Couldn't get it to work, but it seems to be all good today. We got a message through this morning, Steve, saying that we'd won a community award as well for being one of the most active streamers on TradingView. So thank you to everybody that supported us and watched us and got involved.
Lovely.
Yeah, really nice.
I think we just need to sort of like really think about it. I mean, the top two streamers are really focused on the cryptocurrencies, Joe. But we're going,
Yep.
we're taking the organic, the smart route rather than just going on one asset class.
Yeah, I posted up that Litecoin trade idea yesterday, but we
I
couldn't
saw
do it because we
that.
couldn't trade it, and it was working quite nicely. In fact, I traded it myself and managed to get out at a small profit because it turned against me. But you just get the feeling that people just sitting there waiting for it to get stopped out because they wanted to
Yeah,
just
they hate it.
hammer you for it.
Yeah,
How dare
it's
you
like,
short a cryptocurrency?
yeah, serves you right.
Yeah.
Serves you right for not believing, you unbeliever.
Yeah, it was only a day trade, guys, and yeah, got out for a little bit of profit on that one. So yeah, we
Yeah.
move on again today.
Who's laughing
Anyway,
now?
yeah, exactly. I can't bother to entertain the comments. You know, if people are entitled to their own opinion, let them crack on. I always find though, if people do slam them before you get stopped out on the trades, that's the time to double up your position. I think if I'd
Like
done
that.
that in the past, that had been a pretty effective strategy. Anyway, let's get on to the latest headlines. It's a big day ahead. All really eyes on the CPI data that's due out today, but ahead of that, let's just wrap up what happened over the past 24 hours. So we had some nuanced hawkish ECB rhetoric. One of the council members yesterday stated that rates will have to increase significantly. We saw that they said that rates are likely to increase in the coming months, and added that the central bank needs to be pragmatic about the pace of rate hikes and also consider that the bank aims to reach a terminal rate by the summer. Overall, there was a slight dip in expectations surrounding the rate hikes, with the chances of a 50 basis point rate hike for February at around 75%. And we saw some decent strength in the euro yesterday as a result of that, posting net gains. We saw euro US dollar touch a 7-month high. We also saw euro Swiss move above parity for the first time in over 6 months. Some pretty significant moves in the Swiss currencies yesterday. The Fed members yesterday backed slower rate hikes going forward. The Boston Fed President Collins stated that she backs a slowdown in the pace of rate hikes and was leaning towards a 25 basis point hike at the February meeting, although the decision would be data dependent. And of course, we've got a big piece of data due out later today. There's also been fresh Bank of Japan speculation, and we saw some significant yen gains. Early in the Asian trading on Thursday, there were reports that the Bank of Japan will review the side effects of easing monetary policy next week. The report triggered fresh speculation that the central bank would draw back from the very expansionary policy in the year ahead, and therefore we've seen some sharp yen gains. But failed to hold the best levels of the day. The dollar's still struggling, still below that major support that we've highlighted on the charts, and we'll come on to that in a moment. Less hawkish Fed policy and hopes for a global rebound have kept the dollar suppressed. And today it's all about this crucial US CPI inflation data. The latest consumer prices data will be very important for market sentiment, with important implications for short-term confidence and potentially important long-term implications for market confidence as well. The consensus forecasts are for a further sharp slowdown in the headline annual rate to 6.5% from 7.1% previously, which will be the lowest reading since late 2021, with the underlying rate declining to 5.7% from 6%, which would be the lowest reading for 12 months. Weak data would reinforce optimism over a less aggressive Fed policy and support risk appetite. So if we do get a number that comes in less than expected, then we are expecting to see a significant move higher in risk assets. Stronger data would probably temporarily trigger a setback in risk and boost the dollar, and therefore there will be inevitable choppy trading as a result. So really important number today. I think this is kind of overshadowed typically the most important number for markets, which is the non-farm payroll. That tends to create the most volatility. I think the CPI data now is the one that is being watched most intently. So we'll see what happens a bit later on today. We'll come back to that at the end of the show. So Steve, let's take a look at cryptocurrencies. The crypto guys seem to be gaining in confidence and feeling a bit bullish and feel happy to slam any short recommendations against cryptocurrencies at the minute. So is that justified, or are they a bit too early on that, do you think?
Oh no, I think they've got reason to be sort of like quite happy. If you sort of think about it, the the sort of like, I think these are the same guys that were sort of saying buy it at 69,000, it's going to 200,000. Probably is, but anyway, maybe their memories are quite short. But anyway, let's not get too bitter about it. We've got a nice little upward sloping support line at the bottom here. Let's make it blue, just because there's not a lot of blue on this chart. And we've got this resistance, which we hit yesterday again. The resistance comes in at 18,370. The last time we got up close to there, 14th of December, 18,373. So we are above the 100-day moving average, so that's a positive. You've got the 55-day moving average turning positive. So overall, it's a nice little bottom formation that we're seeing here. So I really need a break of that 18,373 to confirm it. However, the daily chart is currently showing a bit of a shooting star candle, pretty similar reaction to what it did last time. So let's really see a close above that level to start to get a little bit bullish on Bitcoin. It'll only be a short-term effect. Really, we've got loads more resistance all the way up. I mean, you can pick any sort of like 1,000 level, 19, 20, 21, 22. Really, sort of like the major ones for me would be 21,500. That's the next major resistance level. After that, 22,780, and finally 25,200. But don't forget the sort of like the super duper resistance at 28,700, which is where we spiked down to and held numerous times before finally breaking down. But yeah, for me, I'm going to put this as the key resistance level here. That'd be it, 25,400. So while prices remain below here, getting in long at 18,000 or 25,000, what's the difference? It's a few £1,000. That's it. If it's going to 1 million like you all think, then who cares? I don't believe so. I think we're still in a bear market, and I don't really think that there's a great chance that we're going to recover to the heady heights that we once were. That's it. That's all on Bitcoin. Okay. Commodities, let's take a look at commodities, some sort of assets that we can actually feel and touch and actually show that it's actually real and it's got a use. The inverse head and shoulders formation is still looking promising on gold. We got up to 1886 yesterday, so that was decent, but we did sort of like pull back and formed a bit of a doji candle, which is a bit concerning. However, today we're off to a good start. Really need to take out that resistance level there. We are going to run into further resistance around about the 1900 level, but it's also a 61.8% fib retracement level at 1896.5. So really sort of like looking to target those levels. The measured move target for the inverse head and shoulders formation is a move to 1966, a great year for England's World Cup winning team. Silver, that still has an inverse head and shoulders formation up just below $25, $24.92. It is stalling around just below that level. So it feels like we've had quite a decent exponential rally, but the sideways price action feels a bit toppish. So, but also consider the overall moving averages, the big moving averages on the daily chart. 55 crossing over the 200-day moving average, golden cross. That's a real positive sign. We're seeing that in a lot of markets. In the indices, I'll show you them in a short while. Copper, since breaking the 200-day moving average, has just taken off like a rocket, like a SpaceX, I suppose. Just kept going and going and going. A little bit of a pullback this morning, but nothing to be too concerned about. We're trading, got up to $4.18. 61.8% fib comes in at $4.30. As you can see, sort of like between the $4 and the $4.56, we're going to get a little bit of resistance coming in, but overall still looks positive. No reason to sort of like get out of this if you're long of it at good levels, just sort of like holding on and targeting better higher levels it seems to be the play, really. So no higher highs, higher lows, all looking really, really decent. The last 5 days has been pretty euphoric. What sort of percentage rally have we had in that? Not bad. We've had 11.5% move higher since the 11th of Jan. That's not bad at all. Oil, finally oil. We're seeing what looks like a bottom in place. We've got higher lows here, which we formed from the 15th of deck to the 9th of January. We're still below the moving average lines, so still a lot of work to do to really get up. We're trading $77.5 on WTI crude oil. Really need to take out the 81.50 to the 83.25 area and close above there to really put the bottom in place. It's still got the 200-day moving average to navigate when we get up to $92. But overall, it feels like the energy side of things after yesterday's oil inventories looks pretty positive. Brent crude oil trading at a premium to just over a $5 premium to WTI crude oil, and you can see the very solid positive day there as well. And again, higher low posted, so same price action, just different levels. $87 next resistance, and then the major one probably for me would be just below the $90 mark. Again, we're still below the 5,500 200-day moving average, so we're still in bearish territory. However, it does look pretty promising, this move higher that we've seen over the last few days. And natural gas, finally, we're still toying with this 350 area. So we got a spike lower yesterday, got down on this chart, it got down to 328. I traded a gun to head trade idea on Oanda, and their low was 343 or something. So my stop was at 340 on their chart. So the prices on different brokers are slightly different sometimes, so bear that in mind. But yeah, posted for me quite a decent candle, although it did make that new low. It posted a bit of a bullish hammer, and nice start today. So again, it looks quite promising for a gun to head poke. So on here you see the gap in the charts between 414 and 435, and that translates into different levels on Oanda, obviously. And also there was a gap on the charts up at this like $6 level, so definitely has potential for quite a fast retracement. So decent risk reward trying to get long and hold longs here. It might not happen during the day, but over time, I think, yeah, as I say, just great risk reward. If you think your risk is probably about 30 ticks against a maybe 90 tick profit. So yeah, look, I might be looking at that today again.
Okay, wonderful. Thanks, Steve. Let's take a look at FX then. And for start off with the dollar index. So prices continue to trade below this support level, which is now resistance. That's at 103.45. So we saw prices fall through that on Monday. And since then, prices have been contained by that resistance level and showing no real sign of being able to get above it. So it could be all changed today, given that we've got this CPI number. And that's going to be really what everything's gearing up to today. If the number comes in less than expected, then we expect the dollar to continue moving lower in line with the dominant trend that we've now established following the completion of this head and shoulders. If we get a number that comes in hotter than expected, then we could see a move to the dollar as people seek a risk-off environment and look for safer havens, of which the dollar would be one. But looking at it purely on a technical basis at the moment, ignoring the news, we look as though we're heading lower towards this 50% fib level as the next target, which is down at 102.15. But as I say, all could change today given the CPI number. If we take a look at euro US dollar, we can see that prices continue to extend higher following the break of this continuation pattern. Looks to be a bullish flag pattern, and prices are continuing to head higher. We've taken out the previous high that we posted on the 15th of December. Not really sort of shot off too far into the distance with this just yet. So there is potential for maybe a pullback to around 106.53 before a further continuation up towards 109.42, which is the 50% Fibonacci retracement level of the entire down move, which started back in January 2021. So still looks as though we've got potential to head higher on that one, but again, all could change today given that we've got the CPI number out later. Let's take a look at cable. That again looks to be completing or have completed some sort of continuation pattern and attempting to move higher. We're not quite back at the highs that we posted back here in mid-December at 124.30. So we need to try and get back to these levels. And it'd be interesting to see if we've got enough really to break through that level and start heading towards the 61.8% fib at 127.57. Take a look at dollar yen. That continues to be trapped within this bearish channel. Prices continue to hit the upper end of the channel and fail to overcome it. But we are coming close to an inflection point where we've got these major levels of support around 130.56 to 131.50. If these levels fail to hold, then the chances are we will continue to see lower prices and maybe quite a significant move, given that this has been a fairly substantial support level for a significant period of time. So we do need to keep an eye on that. And again, we've got these CPI numbers today, which are likely to have a pretty significant effect on this. So we could get a break one way or the other. I think given the volatility that's expected, the chances are that we are going to see a break one way or the other on this one today. So do you want to preempt it or not? I wouldn't personally, because I don't have that much appetite for risk. But if you do, then pick a direction and go with it, because I think it could be a fairly substantial move in either direction. Let's take a look at New Zealand dollar versus the US dollar. We can see here that we've broken out of some sort of triangle pattern, but prices are still capped by this major resistance here at 64.69. So we've still got to get above that before we can start getting too excited about New Zealand dollar strength. If we can get above that, then it looks as though we formed some sort of impressive bottom pattern. Lots of fresh space for this to move into on the upside. But again, it's all going to be coming down to what happens later today with this data. A couple of other markets to take a look at. We saw a fairly significant move yesterday in Euro Swiss. We saw significant Swiss franc weakness. So this has pushed this higher through an important resistance level, which has contained prices for a fair period of time. Looks as though we may have formed a bottom here. Prices accelerating away to the upside, so that looks pretty good indeed. Any pullbacks towards that newly formed support at around 99.44 could be a decent opportunity to buy. And if we take a look at Aussie yen, we can see that this head and shoulders top pattern that we've had drawn on the chart now for a while, we've seen a retest of the neckline, and based on the comments and the potential for more intervention yesterday from the Bank of Japan, we can see a fairly significant engulfing candle potentially forming on the daily chart. Long way to go on the session, but that's a fairly substantial rejection into that major resistance level, which could trigger further losses, maybe down towards these support levels again at 87.30. So we've got a request to take a look at Aussie Swiss, so we will do that. So the Swiss franc yesterday saw significant weakness, which gave this a bit of a boost to the upside. It is into a major level of resistance. As we can see here, prices have been quite range bound now for a period of time. We did overshoot this level back in late December, but the rally higher has found resistance at this black line, which is at 64.47. It's also a short-term Fibonacci retracement level of 50% from these highs that we posted in August. So that is a pretty tough area of resistance to break down. If we can get above it, then maybe we form some sort of bottom pattern and higher prices can be seen. But alternatively, it could be a decent opportunity for range traders out there to try and take advantage of this by selling close to the upper end of the range with a stop loss maybe somewhere around there, which is at 64.82, just above these high candles from October, targeting maybe a move back down to the lower end of the range, offering a risk reward ratio of 4.7R. So that would be very nice indeed. But of course, if it does start to break through this level, then that would suggest that we are wrong on this, and you probably want to be out of it because it could keep going to the upside. Any other requests on?
There's just like sterling yen, euro yen, Swiss yen. So they're just
sterling yen.
Yen pairs basically. So
yeah, I mean, so I understand that. So yeah, we saw the move in yen overnight. Looking at sterling yen, we've seen a decent bounce from around this support zone here at 157.00. Today we are in the process of potentially forming an engulfing candle. If that confirms today on the daily chart, then I'd be looking for a retest of around 160.48 to target lower levels. So still think that we could see more yen strength as a result of the commentary that we've seen overnight. What was the other yen pair? Euro yen, did you say?
Yeah, euro yen, Swiss yen, yeah.
Okay, so euro yen again, potentially forming an engulfing candle into these resistance levels that we've posted over the last couple of sessions. So we've hit this previous swing high from the 28th of December. We've come up just shy of that yesterday, but posted an engulfing candle today. So I think if that confirms on the daily chart, then that would give us a bias for prices to head lower and potentially forming a larger top pattern here on euro yen. Euro is pretty strong at the minute as well, but it looks as though maybe yen is just that bit stronger in the very short term. So keep an eye out for an engulfing candle completion on the daily. And Swiss yen was the other one. Did you say, Steve? Sorry.
Yeah.
Yeah, okay. So this has rallied into the resistance level that we've got here, formed like a triangle top. We rallied into that level yesterday, failed to overcome it, and we saw the engulfing candle complete yesterday. So I'm actually got this on my own trades, looking for an entry on this around 142.72 if we can get it, which is a retest of the candle prior to the engulfing candle, which I always find tend to get sometimes a nice retest and provide decent entry points. So yeah, I would agree that that is looking as though we may see lower prices, and I'd be probably targeting first of all a move down to these levels here, 137.79, higher from back here in June. We saw it test again in August, so a pullback to that level seems logical. So I'd be looking for something like this in the short term. Fairly tight stop, looking to target and move down to that support level there, which gives us a risk reward ratio of about 2.6R. But I'd need to see a bit of a pullback. I wouldn't want to jump on that just now because the risk reward would not be too favorable, looking at less than 1-to-1 on that if you were to sell now, targeting those levels down there. Okay, hopefully that was useful, guys. Obviously, any other requests, feel free to post them up. We'll do our best to cover as many markets as we can. Over to you, Steve. Let's take a look at indices.
Yeah, sure. Let's take a look. We'll start with FTSE, and FTSE is above resistance. It's broken. Let's look at the weekly chart to start with. We've managed to get above the previous highs that we were posting lower highs and had a nice big swing down in October to these lows. Since then, it's only been one way for the FTSE. The only way is up, and we've broken through resistance, and we're climbing and targeting probably this top here. We've got in May 2018. The high then was 7,900. We're only 150 points away from that. That's the all-time high. So let's get our buying boots on. It doesn't. It feels a little bit similar in the DAX. Breaking through some decent resistance levels, this band of resistance that we had here, I suppose we could sort of like get it up to there. We are above it. It's looking pretty positive. The last couple of weeks has been just one-way traffic since the start of the year, and that's. I mean, I suppose we could look at the volumes to see sort of like what sort of volumes this is going up on. I mean, the volumes are sort of declining as we rally. So that's a bit of divergence, but we can't take. I can't sort of like stress enough these like the crossovers we're getting on the 55 and the 200-day moving average, golden cross here. You know, this was the first sign that you should be buying it. 55-day crossing over the 200-day, it's always a bullish sign. That was when we were trading at 13,915, and really it only got down to 13,695 before this exponential rally we've seen. So it all looks pretty decent, and you know, we've got four nice green candles. The only one that sort of spoils the 8 or 9 candles is the 5th of June, which was a little bit of a weak doji. S&P, sorry, US 30, the Dow, again, golden cross here, 16th of December, and it's been one-way traffic since then, really. It's been a little bit choppy, but then has been pretty decent. We haven't got the same in NASDAQ. The tech sector of the US, the NASDAQ 100, has struggled really to regain its what it did before. You can see that like the FTSE, the DAX, and I think the Dow as well, yeah, broke up through its downward trending resistance line, the solid, but we haven't even got close to it on the NASDAQ. So still a long way to go for that to recover. You've got some heavy losses in the big techs. So that's really what's impacted this. We're above the 55-day moving average. It's the first time we've been above it since mid-December, so that's positive. And it does look like we have got a really nice bottom in place. The double bottom has hit its measured move target. Now it's just a case of showing how strong it is. And obviously, the CPI and inflation figures later, this will be a big driver of that. S&P, that hasn't broken above its, well, it did. It poked its head above it on the 13th of Dec, this downward trending resistance line. It's still got a long way to go. There's the S&P 500. There's a lot more shares in here. We've got the crossover in the 55, the 100, and we will be getting the crossover in the 55 and 200 should we maintain this sort of like strength. And yeah, looking for a nice break here. So there's a few markets that have got, rushed ahead, jumped ahead, and there's a few that are playing catch up at the moment. Aussie 200 over the last, since the start of the year, has had a really decent rally after the initial sell-off, and that's recovered a lot of losses, really targeting a move to the December swing high, which came in at 7344. China 50 inverse head and shoulders formation, targeting a move to 14,437, although we are starting to get a little bit of a slowdown in this. Hanging man candles, be wary of those. They can sort of like, they tend to sort of show that the momentum is stalling on these types of moves. We haven't had the crossovers that we've had in the other markets, but the China market opening up again. But is there any demand out there? With this inflation at these sort of levels globally, it's going to be a tough one for the China to recover properly. We've got a nice crossover on the Hang Seng. Again, we've seen these, like the last few days have been candles have been pushing higher, but they seem to be straining. Nikkei doesn't really feel the same thing. That's actually looking like it's going to have a crossover to the downside. The 55 crossed over the 100, but it looks like it's going to cross back quite quickly. So yeah, Nikkei struggling a bit. That's about it for the covering the indices. I'm looking forward to the gun to head because I really don't know which one to go for.
Oh, I'm really struggling. I've had a quick flick through while you were talking.
It's got to be a yen one, mate.
Oh, well, I don't know. I kind of want to sell into a bit of weakness with that if I can get the opportunity to do it. But anyway, let's move on. Let's talk about the gun to the head, what it actually is first of all. So this is where Steve and I pick trade ideas live on the stream, and as if we had a gun to our head, what would we trade right now? Each of the ideas we come up with must have stops and targets. They're all placed at market and updated and uploaded to our TradingView profile, which you'll be able to find at signal_center. The risk reward ratio on these trade ideas must be better than 2 to 1 as well. So you can see yesterday the trade ideas that we published. I went short of Aussie CAD, and Steve had another stab at natural gas. Now, a bit of a twist now on these trade ideas. As from the start of the year, we're actually doing these on a live basis. We've set up a real account with £2,000 worth of cash, so not not swinging around huge sums here, but just playing around with a little bit of cash just to make it a bit more realistic. And we're risking 1% each per trade on these on that account. So yesterday we had the Aussie CAD idea. Let's just have a quick flick through that and check on the replay mode to see what happened. We're selling that. And at 9 o'clock, when we closed these trades out, that was 0.32R offside, so didn't hit the stop. Certainly wasn't a full loss, but still a loss nonetheless. And Steve had a crack at natural gas, finding support, as he's mentioned on a few occasions now. And at 9 o'clock, despite some volatility yesterday, he was actually 0.08R on side, so pretty flat on that, but it goes down as a win, so well done, Steve.
Woohoo!
Right, so we've got to go again today, Steve. Anything that's floating your boat this morning?
No, not really. Let me sort of like share my screen. This is the O and of the live account. This sort of shows the trade ideas we're getting in there. It shows a £6.34 loss yesterday, 151 profit yesterday. So just to prove we are doing it, because I know there's a few non-believers out there. But anyway, yeah, I'm very tempted to go with natural gas again, because it's like third time lucky, surely.
It's not broke, don't fix it.
Yeah, posted a bullish hammer yesterday, and looking to sort of like break high. I'm very tempted by the maybe dollar yen as well. I'm sort of like thinking that the powers that be will sort of manipulate the CPI figure to make it look a little bit better. So we get sort of like that rally in the indices. So I could be buying indices or could be selling dollar, whatever. But I'm going to go with natural gas because this is priced in dollars, so it might sort of help it. If we look at the hourly chart, you know, people are just like going to hold their heads in their hands and just like, I've found a lot of inverse head and shoulders formation. So there we go. This is it. I mean, bit of a messy looking one, bit of a messy pup. I mean, for me, it's like key to sort of like break above this resistance here. So we're not quite there. Ideally, I'd be buying a break off there, but listen, I'm getting in cheaper than yesterday. That's the way I'm feeling. So I'm going to put a long position on around here. Stop can be there. But my target is higher. I want to target this this move up here. Actually, I'm doing it all wrong, Joe, because I should be doing it on the Oanda chart because it's different levels. Silly me. So same sort of formation though, inverse head and shoulders formation. And we have broken above it. We're also trying our best to break above the Ichimoku cloud. We're in the hourly Ichimoku cloud, so that'll be a change of trend if we manage to get up above 380. So where do I want to target? I want to target this level up here. So get this up here, bang. Target that level up here. Let's bring the stop right in. Now I could be a little bit more aggressive with the stop to try and get a better risk reward out of it. Why not? Why not, Joe? Right, what time do we want to shut this? This trade shuts at 9 o'clock. So there's that's what we're looking at. So 175 to 700 would give us a 4-to-1 risk reward. Don't mind that little baby. For me, that looks okay. Yeah, I'm going to go for this. I'm going to try and set that now on the trade idea. Get it on, create a new order without messing it up. That's the plan, Joe. So want to risk 1%, which gives us 1974. That's the equivalent to the account size, 1% of the account size. But I want to put the stop at 354.5. So how do I do that? Price 354.5, and the target is 441.80. 441.80 gives a 3.93 risk reward. So not well, close to 4-to-1. So yeah, I'm happy with that, and I will buy that bad boy. Okay. You're in. It's in, Steve.
Yep. Good luck. Can you bring up dollar Swiss for me? That's where we're
certainly
going.
Can. Oh, dollar Swiss. You're obviously buying it.
No, obviously not.
I just wanted to throw that in there just to fool you.
Yeah, okay, so let's just talk through this, shall we? So what am I seeing here? So first of all, I'm going to go to the weekly chart on dollar Swiss, and this looks as though it's a big double top formation that we formed on dollar Swiss on the weekly. So we completed that on a breakdown through this support of 93.68. We're coming pretty close to testing that again. If we look at last week's candle, we can see that prices tried to move above it and then formed a fairly swift reversal on that level. We've made new lows this week, but we're fighting back. Just wondering what's going to happen, obviously, with this CPI number. This makes, obviously, the trade exceptionally risky, so do be careful if it's one you're going to follow. I'm happy to go with it because I couldn't find anything else, to be quite frank. This is the daily chart. Looks, the only concern for me here really is it's potentially forming a bit of an ending wedge, and if we get a breakout from here, it could significantly move higher in a corrective form. But if we take a look at the intraday charts, this is the hourly that Steve had up on his charts a moment ago, we can see that prices have moved lower and the correction back has come up pretty well, just shy of a 78.6% fib at 93.57. We've also got these lows throughout this period here prior to that eventual breakdown, which seem to be acting as resistance. So I'm going to sell it at current level, Steve, which is 93.39. And I would like a stop loss above the height of this candle here where we saw the breakdown. So this was the impulsive move lower. So I want to go just above that at 93.98 as a stop loss. So just under 60 ticks. And I'm going to target a move back down to the lows that we posted on Monday, the 9th of January, which is at 91.67.
Yeah.
Which gives me a 2.92R.
Yeah, I got 2.82R here because obviously the price is changing. But
everything. Yeah.
Your stop is at 93.98, targeting 91.67. Is that right?
Yeah, perfect. Get it on.
There we go. We're in.
Okay, so we've got the trades on. We are expecting significant volatility in the markets today because of this CPI number. Let's just go over the expectations of that again and have a look at what else we've got on the calendar to look forward to. So 1:30 is when the data comes out. Just to give you an indication, on the last 10 occurrences on the CPI data, on average, we have seen moves of around 58 ticks on euro US dollar in the subsequent hour. I would imagine that over the last few events, it's probably been even higher than that, because that's an average over the last 10. And really, inflation has been fairly significant for the last maybe 3-4 months in terms of, starting to see potential topping out of the rate. So, yeah, we are expecting significant volatility. Fancy a stream on it, Steve, later?
Yeah, let's do it.
Okay, we'll do a stream on it later as well. Then just a quick 10-minute one over the event, just to catch the initial reaction and also follow up on these trade ideas that we've published. So in terms of what we're expecting to see, the annual rate is expected to go to 6.5% from 7.1%. So 6.5% or lower. I think we would see a fairly significant move in riskier assets like equities, potentially cryptocurrencies, and we're likely to see a sharp move lower in the US dollar. If it comes in above 6.5%, then we could see the dollar move higher as people seek shelter and safer assets. So that's the number we're keeping an eye out for. We'll come back later and we'll prep for that, and we'll get some charts on as well to catch the live reaction to that. We've got initial jobless claims due out at the same time, but I think that's going to pale into insignificance given that all eyes are on the US consumer prices. Tomorrow morning, we've got UK GDP out. That will be prior to our show. That'll be at 7 a.m. UK. And then next week, we've got Chinese GDP, the Bank of Japan policy decision. Obviously, lots of talk going on there about potential speculation of a further easing of monetary policy or certainly restricting that. And we've also got UK inflation next week as well. So let's leave it there, Steve. We'll come back around 1:25 UK time and just do a 10-minute stream over the CPI number. We hope to see you there if you want to join us. If not, hopefully we'll see you again tomorrow morning.
Yeah, perfect.
Thanks for watching. Bye-bye.
Bye.